Breaking news coming in, but just getting back to the point about inflation, while that continues to be sticky, does the RBI have enough room to cut rates month end?
I'm sorry I can't comment on the role of RBI because I am on the advisory committee on monetary policy of the RBI, and since they're about to in a few days make a decision on this, I cannot at this point give you a comment on it. But I will say that the inflation rate, as you point out, is still quite sticky or high, both in terms of the wholesale price index that we've just seen, as well as the retail price index or the consumer price index. There too the numbers are still high. And in that sense, I think inflation continues to be quite strong and well above comfort levels.
Right, Dr. Acharya, government has taken several steps by hiking FDI in retail, by hiking FDI limits in aviation. Do you think this will now permanently avert the risk or a downgrade, or it's too early to sit back and celebrate?
That's an open question. Remember also that the government has taken a number of other measures, including the increase in diesel prices as well as the LPG prices, and also, of course, the agreement on resolving the dues of various state power entities with respect to arrears. Now, that plus the bills that were cleared about a week ago by Cabinet clearly do send a reasonably strong message on sound economic policy, both on the fiscal side and reform side. But whether this is enough is, I think, not entirely clear. I think it's probably enough to certainly postpone any ratings downgrade, and whether it's enough to completely ward them off will depend on whether other actions are taken. I think that also the real issue here is what is the impact of all these measures on actual investment and growth in the Indian economy, and that we shall only see as the future unfolds. My own assessment would be that by themselves they are probably significant in slowing or perhaps even stopping the sharp downhill slide that we have seen in recent months, but whether there can be actual reversal in terms of, let's say, an acceleration of the growth and investment performance of the economy, that remains to be seen.
Right. So, Dr. Acharya, what is your view on fiscal consolidation? The Kelkar committee has made a lot of suggestions to control subsidies. Do you think these can be implemented?
Well, as we have already seen, on September 13th, the government did increase the prices of diesel and LPG, and I think those will probably be equivalent to about 0.2% of GDP on a full year basis. Now remember that the Kelkar committee has pointed out that the central government's major subsidies are expected to be about 2.6% of GDP, well above the so-called cap of 2% that had been proposed in the March budget. So if you take away 0.2 from 2.6, you are still left with 2.4. And so clearly the moves that occurred on September 13th will not by themselves be sufficient to make a big change in the fiscal situation. They are significant but not huge, shall we say, or not adequate. And for that we certainly need to look at the other measures that have been recommended by the Kelkar committee, which include immediate increase of 10% in the urea fertilizer issue price, to be followed by subsequent years adjustment according to cost increases in future, We need to look at also the sugar decontrol.
Right. Professor Acharya, how do you view the food security bill? Next year, government will focus on elections and we probably will see the food security bill. But given the kind of fiscal deficit currently we are sitting on, do you think we can afford a food security bill?
Well, quite clearly, if the food security bill is enacted in the present form, then it will add very substantially to the subsidy burden, as you call it. And here, if you will recall, the recent Kelkar committee has clearly recommended that until our economic and fiscal situation improves substantially, the food security bill be put on hold. And I would certainly agree with that recommendation.
Right. So how do you view the current account deficit over the coming 6 months, or, to the in the light of the rupee having appreciated recently and also the global oil prices having cooled off a bit?
Now there is an expectation that because of a decline in the gold price and reduction of imports of gold into India, amongst other commodities, we might see an improvement down to perhaps 3.5% of GDP or so forth. But you said about the exchange rate having depreciated. Yes, there was a substantial depreciation between, let's say, August of 2011 and September of this year. But in the last few weeks, there's been again an appreciation of the rupee because I suppose the government's positive moves have encouraged a significant amount of foreign institutional investor inflows into the country, and these have not only boosted the stock market but have also led to an appreciation of the rupee. And unfortunately, I think, in my view, the government and RBI have allowed this appreciation. I think that given that our current account deficit and trade deficit are running very high at record levels, it's probably not a wise move to have allowed the kind of appreciation that we have seen in the last 3 or 4 weeks.
Professor Acharya, what are your thoughts on the Indian GDP growth? Are all the structural drivers intact, or do you think the demographic divide could actually backfire if high inflation and high fiscal deficit are not controlled?
First of all, I think on growth, there are clearly some long-term positive structural drivers, as you call them, of the Indian growth story. These include the fact that we are a poor country playing catch-up in a world where many other countries enjoy much higher levels of national income and consumption and technology. And so there's clearly potential for India to grow fast, as we've shown in our own recent record of the last 15-20 years. There's also the structural driver of a young population, a lot of entrepreneurial talent, and of course the so-called demographic dividend, which refers to not just that the population is young, but larger and larger numbers are entering the labor force, and so there's plenty of labor available. But the problem here is that our policies have not been very good at creating jobs, which would be the demand for labor.
Right, and Dr. Acharya, the focus on infrastructure sector is highly crucial for the GDP growth. What, according to you, are the likely steps that the government must take in the next 6 to 9 months to have the path for long-term India GDP growth to sustain?
Well, I think the government, first thing it has to do, of course, is de-bottleneck the problems that we have in all the major infrastructure sectors. For example, as you know, in electric power, while the public-private partnership system has, over the last few years, has led to the creation of very high levels of investment in the power sector, private investment, but a lot of that is now lying idle. Somewhere, by some estimates, 25,000 to 30,000 megawatts are now lying idle, and that's because of several reasons, including the absence of fuel supply agreements with respect to either coal or gas, or it is to do with the fact that many of the state distribution companies just don't have enough money to buy power that is generated, and that's because either there's a lot of theft in the system, distribution system, or because they have not revised their tariff structure appropriately. And until all these problems are resolved, the power sector clearly is going to be a big constraint.
Professor Acharya, really appreciate your time, and thank you for your valuable and good insights.